معرفة.
Good morning, sir.
I would like to order 2 breakfasts with tea, but after a few minutes. A friend of mine will be here soon.
Okay, sir.
Assalamu alaikum.
Walaikum assalam. How are you?
I'm fine, alhamdulillah. How are you?
Yes, I'm also fine.
How is your family?
They're all doing well. Alhamdulillah. Can you please serve the order?
Sure, sir, in a moment.
So, how is New York?
Excellent. Got the project from the client.
That's great. Guess that is worth a huge party.
Sure, why not?
Hussam, our discussion on the fundamentals of Islamic economics and Islamic finance was not completed. As you know, I don't have much knowledge about the basic structures and contracts of Islamic finance. Why not we discuss this today?
It's a good idea. Assalamu alaikum.
Walaikum assalam. Hussam, this is Bilal. I wanted to know the status of my corporate facilities arrangement application.
There is some more paperwork to be done. Can you please come to the bank tomorrow to finalize it?
Sure, I will be there.
Sorry, Ali, it was a customer call.
It's all right. Okay, now on Islamic finance.
There are around 10 important contracts that are commonly practiced in Islamic finance. But before introducing them, I think you should take a look into the concept of contract itself.
Yes, sure, go ahead.
A contract is known as aqd in Arabic, which means to tie or to knot or to join.
How are these words related to a contract?
You see, basically in a contract, either 2 or more persons having legal capacity come to an agreement to execute a certain activity. This agreement will define the intention of the parties and establish their rights, duties, responsibilities, and liabilities.
If that is the case, then how it is different from a conventional contract?
The Islamic contract is strictly governed by Islamic legal principles, whereas the conventional contract is not. A contract is deemed to be legal and lawful in Islam only if it fulfills the requirements prescribed by Sharia.
What are the Sharia requirements for a contract to be valid?
There are 3 basic requirements. Firstly, there has to be an offer and acceptance between the parties. Secondly, the parties must have legal capacity to enter into a contract. This means that they must attain puberty, maturity, and must be sane. Thirdly, the subject matter of the contract must be Sharia compliant.
That is interesting. Can you please list out a few Islamic finance contracts for me?
Sure, why not? The important contracts currently practiced in Islamic finance industry are Murabaha, which is similar to a markup sale, Babit Taman Ajil, or BBA, which is a deferred sale, Musharaka, which is like a partnership, Mudaraba, similar to venture capital, Tawarruq, like monetization, Ijara, Islamic lease, Salam, supplier finance, Istisna, manufacturing finance, and Wakala, an agency.
Long list. So how have these contracts evolved in Islamic finance?
Well, Islamic finance contracts have been evolving throughout the development of Islamic civilization based on the requirement of the society. Most of the contracts that we see today in the Islamic finance industry have their origin in the early period of Islamic history in their basic forms. Later, keeping the principles of these basic forms intact, the comprehensive financing contracts for modern Islamic finance industry have been developed.
Waiter,
Yes, sir.
can you please bring 2 cups of tea?
Sure, sir. Just in a minute.
I heard a lot about Murabaha. Markup sale recently. Can you define it for me?
Sure. Murabaha is considered as one of the trust-based sale contracts in which a commodity is sold on cost plus profit basis to a customer. The seller is required to disclose the cost as well as the profit margin to the customer.
But I heard that it is a deferred payment sale.
Yes, your information is right. Generally, it is practiced as a deferred payment sale, but in principle, deferment is not a required feature of Murabaha. The payment under a Murabaha sale contract can also be made on spot. Just for your information, there is a sale contract known as Bay-bi-Thaman Ajil, in which deferment is the basic feature.
A couple of months ago, one of my friends had bought a car on Murabaha from an Islamic bank. Can you briefly explain the mechanism of this purchase transaction?
It's simple. Your friend visited an Islamic bank with specifications of the car he wanted to purchase and promised to buy the car from the Islamic bank if the bank purchased it from the car dealer. The Islamic bank purchased the car from the car dealer as per the specifications required by your friend on a cost price, say for example $100. And after getting the possession of the car, the bank sold the car to your friend, adding its profit margin, say $20. Now the total sale price of the car is $120 to be paid in 12 monthly installments of $10 each.
It appears from your explanation that Murabaha car financing is similar to the conventional car financing, is it not?
It is not similar to the conventional car financing. There are a few differences of this transaction that I can make out before you which are not present in conventional one. Firstly, the bank takes the ownership risk of the car by purchasing it prior to selling it to the customer. Secondly, in case of default or delay in regular installments, there is no extra amount charged to the customer on the selling price agreed at the time of the contract. Even in some cases, if a fine is collected, then it will not be treated as income of the bank, but it will be given to charity by the bank on behalf of the defaulting customer.
I got it. Can you please let me know some more applications of Murabaha?
Murabaha is applied in various products such as home finance, working capital finance, project finance, goods finance, trade finance, Murabaha-based sukuk, profit rate swaps, Islamic funds and credit cards.
That's good. You also mentioned Tawarruq. What is that?
In Tawarruq, which is also called as monetization, a Murabaha is used, but in this case, instead of utilizing the commodity or asset purchased from the Islamic bank, the customer will sell the same commodity to a third party for a spot price to obtain cash.
It means that the customer would end with cash in hand situation, right?
Exactly. And this particular contract is used to fulfill the liquid cash requirement of the customer. It is applied in products such as working capital finance, project finance, credit card, and personal finance.
See? I've become an Islamic banker.
There is another contract called Musawama, particularly applied in goods and vehicle finance. Technically, it is similar to a Murabaha contract, but the only difference is that in a Murabaha, the seller must disclose the cost and profit margin to the customer, while in Musawama, it is not necessary, where the sale price is set after the negotiation between the parties.
Waiter,
Yes, sir.
please bring some biscuits and 2 more tea.
Okay, sir.
Can you please briefly explain the Musharaka contract?
Musharaka is a partnership between 2 or more parties whereby each partner contributes capital to the partnership on condition that the profit is distributed as mutually agreed and losses are shared in proportion to the capital contribution.
Can you give an example?
For example, a customer who wants to start a project visits an Islamic bank for financing. Using this contract, both of the parties contribute capital. Say the Islamic bank contributes $80 and the customer contributes $20. They both agree to share the profit in a certain ratio, that is 60 is to 40. 60 for the bank and 40 for the customer. And the loss according to their capital contribution, that is 80 is to 20. 80 for the bank and 20 for the customer. Suppose the project realized a profit of $10. Then $6 would be given to the bank as a profit and $4 would be given to a customer as its profit. If there is a loss of $10, then $8 would be borne by the bank as loss and $2 will be borne by the customer as its loss.
That is fine, but if the customer does not want the Islamic bank to be a partner in the project in the long run, then?
In that case, they need to choose another form of musharaka known as diminishing musharaka. In this type of contract, one of the partners, generally the customer, would buy the share of the other over a period of time and at a certain period in future would become the complete owner of the project. Musharaka contract is applied in products such as home finance, project finance, trade finance, equity products, Islamic funds and sukuk.
What about Mudaraba? How is it different from Musharaka?
Unlike Musharaka, in Mudaraba only one party provides money, whereas the other provides management skill, on the condition that the profit is distributed in mutually agreed ratio and losses are borne only by the partner who provides the capital.
If we take the same example as we have taken in Musharaka, then what would be the technical changes?
In that case, only the Islamic bank will contribute the total monetary capital, say $100, and the customer manages the project through its management skill. And the profit of $10 is shared in the ratio of 60 to 40, and $6 would go to the bank, whereas the customer would get $4. And in the case of loss, the total $10 would be borne by the Islamic bank.
In case of loss, only the bank is at risk, but not the customer, right?
Not really. Both parties are at risk. The bank loses its monetary capital, whereas the customer his or her time and effort. Mudaraba contract is also applied to products such as savings account, investment account, project finance, takaful products, sukuk and Islamic funds.
It is good to know these contracts. What is Istina?
No, Ali, you pronounced it wrong. It is Istisna. It is a contract of sale of specified items to be manufactured or constructed. The payment towards purchases of those items is made either in advance or in different stages as per the progress of the manufacturing or construction, or can also be made at the end. Istisna is applied to products such as home finance, project finance, etc.
I got it. I guess Salam is quite the opposite.
Okay, you mean Salam. It is almost similar, as this sale is also for items that are not in existence and will be delivered in future as per agreed upon specifications. The difference is that in Istisna, the payment term is flexible, whereas in Salam, it must be paid in advance while entering into the contract. This contract is particularly used for working capital finance in financing for agriculture and some other products.
What is Ijara?
Ijara means leasing of a property to a customer for usufruct against rental payment for a specific time period. Ijara is the sale of usufruct, and usufruct is a right of enjoyment from property. For example, the dining hall in which we are sitting provides us the right of enjoying the space and the furniture in it. So if I lease this hall under Ijara for a day, what I'll be buying is the right to enjoy from this hall for a day. Suppose if I lease this hall and one of the table breaks, not because of my mistake, but because it was already damaged, then the loss will be paid by the restaurant owner and not by me. So one of the main points to remember in Ijara is that all ownership risks associated with the leased asset are borne by the owner of the property and not by the one who has taken the property for lease.
Can you give me an example of Ijara mechanism?
There are three types of Ijara. The first one is a simple Ijara, similar to an operating lease. And an easy to understand example would be if you lease a car for a month from a car rental service. The second form of Ijara is lease to own, and this is used to finance constructed assets. For example, if a customer wants to buy a house, and suppose the value offered by the existing owner of the house is $100, the bank purchases the house paying $100 from the existing owner of the house and adds its profit margin, say $20, in the Ijara contract and leases it out to the customer on a 12-monthly lease rent for a period of 1 year. The rentals will capture both the principal, which is $100, and the profit, which is $20 in it.
How is the ownership transferred to the customer?
The ownership of the house is transferred to the customer through a separate document other than the Ijara agreement after the period of 1 year as per the example discussed. The document can either be a unilateral promise from the Islamic bank to sell the house to the customer for a nominal value at the end of 1 year, or a conditional gift contract.
What is the third type of Ijara?
The third type of Ijara is the forward Ijara. This is used to finance the under construction property. In this form of lease, the Ijara is concluded between the parties even before the asset is delivered to the customer by the bank. The bank appoints the customer as contractor to construct and deliver the property so that it can be leased back to the customer. During the construction period, the customer pays advanced rentals which form part of the first rental period's rental amount, and in case the property is not delivered to the customer, then the advanced rentals are returned by the bank to the customer.
Any other applications of Ijara?
Generally, Ijara contract is applied to products such as home finance, vehicle finance, sukuk, etc.
I see.
I think apart from Wakala, we have discussed the important contracts of Islamic finance. So let me give you an idea about the last one, that is Wakala.
Go ahead.
Wakala is an agency contract in which a party delegates the authority and responsibility to another party to act on his or her behalf and in his or her interest.
Is the agent entitled to a salary or fee?
Yes, an agency fee.
What are its applications?
It is applied to products such as trade finance, takaful, Islamic funds, Islamic syndicated finance, sukuk, investment accounts, etc.
What about bank accounts?
There are two structures, qard and wadiya, and either of them is used for structuring an Islamic current account. In wadiya, the funds deposited are considered for the purpose of safe custody, and a prior customer approval is obtained in case of wadiya by the bank to use these funds. And in qard, it is an interest-free loan given by the depositor to the bank. In both these structures, the bank utilizes the deposited. The bank is obliged to return such deposits on the demand as per the contract.
Are there any structures you think I should know?
In addition to what we have discussed till now, there are a few more structures such as kafala, hawala, urbun, wad, etc. I will let you know more about them some other time, inshallah.
Okay. May Allah reward you with goodness for sharing this valuable piece of information with me.
It was my pleasure. Waiter, please get the bill.
Yes, sir.
This breakfast is on me.
No way.
It's all right, Hussam. Let me pay this time. Your big party is waiting.
Okay, you're welcome.